We are talking about the current status of the electric vehicle sector and the turbulence caused by the easing of emission rules, which has resulted in a reduction in growth from 90% to 15% in the last year. Reduced dealer excitement for selling EVs, stagnant investments, and lower prices are the causes of this shift. This video will examine the causes behind the electric vehicle market's collapse, as well as the steps that need to be taken in order to transition to a cleaner, more efficient future. Although electric vehicles have the potential to replace conventional engines, the recent drop in EV sales has many concerned about the future of the sector. Come along as we unravel the causes of this dip and what it means for electric vehicles. The fact that the current generation of EV models is not living up to consumer expectations is one of the main causes why the EV market is about to collapse. According to a recent Boston Consulting Group survey, 40% of consumers say they intend to convert to electric vehicles. However, they want an automobile that costs $50,000, has a minimum range of 350 miles on a single charge, and can be fully charged in less than 20 minutes. Unfortunately, the Hyundai Lincoln 6 is the only EV model now available that satisfies these standards. This demonstrates that there is still a long way to go before the EV market can attract the typical consumer. Because of this, even large companies like Ford and GM are delaying investments and production schedules in order to save money and give priority to more urgent demands. Secondly, automakers' financial difficulties can be attributed in large part to their introduction of electric vehicles. The high cost of batteries, the difficulty of manufacturing optimization, and other problems have prevented legacy corporations like Ford and GM from developing a viable business model, despite spending billions of dollars in this field. Except for Tesla, none of these automakers have really been able to turn a profit on electric vehicles, with losses totaling billions of dollars. For instance, Ford lost around $36,000 on each F-150 Lightning sold the year before, for a net loss of more than $5 billion in 2023. Thirdly, the dealers' unwillingness to accept electric automobiles. The dealers' lack of enthusiasm for EVs, the market standard, is a reflection of the problems these cars face. A lot of dealers are hesitant or unwilling to sell EVs. In 2023, half of the Buick dealers will have closed as a result of their decision to accept buyouts rather than continue selling EVs. There is also a big discrepancy between supply and demand. In the US, there is a 114-day supply, which is twice as long as it was last year, and nearly twice as long as there are gas-powered cars. Because of this, nearly 50% of Ford's dealers are unwilling to sell EVs, mostly because doing so would involve spending $1 million on infrastructure and training. Dealers find it difficult to sell EVs without providing substantial discounts because of the lengthy sales process and the thin profit margins. Fourth, the difficulties that Tesla has encountered. Tesla is the most valuable car manufacturer in the world, and its errors have shocked the whole electric vehicle market. The company's performance in the first quarter has been difficult due to severe price reductions that have eaten into profit margins and fierce pricing competition with BYD in China. Additionally, investors have not been very receptive to the North American recession and the pressing need for a more inexpensive EV, which has resulted in a sharp decline in share prices in recent months. Stocks dropped 7.2% in the first week of March alone, finishing at $188. Stocks have fallen by 24% since the year began. Legacy automakers are having similar problems to American automakers that have thrown billions of dollars into failed EV initiatives. In November, General Motors unveiled a $10 billion share buyback plan aimed at regaining investor confidence. Fifth, the EV market's age of steep discounts. Tesla was forced to reduce prices significantly last year in order to clear its 2023 electric vehicle inventory. Other automakers had to follow suit, such as Ford, which provided significant discounts on its all-electric F-150 Lightning. However, Ford lost over $5 billion in 2023 alone due to the discounts. The situation has been exacerbated since most electric vehicles are now ineligible for new federal tax credit regulations. Almost all EV models are now sold at prices below the manufacturer's suggested retail price, with premium cars such as the Mercedes-Benz IQ SUV offering typical savings of $10,000. Mainstream players such as Volkswagen and Hyundai offer discounts of $3,000 or more on models like the LD4 and Launig 5. Wow, this is getting more interesting, right? Please do remember to subscribe to our channel to receive updates on the newest trends and insights regarding vehicles. Sixth obstacles are faced by the rapid electrification plan. The EPA has scaled back its goal for electric vehicles, EVs, in the US. The previous objective was that 2/3 of new cars would be electric by 2032, but recognizing the slow uptake of EVs, the EPA has lowered the target to just 1/3. This would also include plug-in hybrids. Plans set out by the agency also propose lower emission regulations, lowering the target from a 56% to a 49% reduction in CO2. Changes will see Big Three automakers keep their current pickup offerings without significant adjustments, and heavy-duty trucks will continue to use gasoline or diesel fuel. The modified standards will also allow the market to expand naturally and automakers to avoid green tax credits. Seventh, the electric pickup industry faces challenges due to falling sales. The market for electric vehicles is expanding, but electric pickups are encountering challenges. Rivian, an early manufacturer of electric pickups, saw a 14% drop in sales by the end of 2023. Sales in January were also down by 43% compared to the same month in the previous year. And if the trend continues, Rivian may only sell around 9,000 pickups this year. Traditional automakers such as Ford and GM are also struggling to meet demand for electric trucks. Electric pickups have not lived up to the expectations of internal combustion engine drivers, as automakers have prioritized luxury over utility, repeating a mistake made with EV vehicles. Truck buyers prioritize convenience, usability, value for money, strong towing and payload capacities, aspects that electric pickups frequently do not perform well in. Therefore, sales of electric pickups are surprisingly modest, as they are often overpriced and underperforming, particularly for towing and range. Though it may have faltered, the EV market is still rising. The future of electric vehicles looks promising given the rapid improvements in technology and the increasing demand for environmentally friendly modes of transportation. Therefore, let's rise to the obstacles and strive toward a more sustainable tomorrow rather than focusing on the setbacks. I appreciate you seeing. Kindly subscribe to our channel, like it, and share.